All right, bad news on the payroll front. The jobs. um, Not good. And this isn't good. Now, I'm gonna need your help. I'm trying not to be a pessimistic guy. I'm trying to call it like I see it. But I don't want to be one of these guys who like you can easily identify anything to prove your point for. I don't care what it is, man. You can prove your point that there's going to be global cooling right now. You can prove your point it's going to be global warming. You can prove your point that Tom Brady is the worst player ever. You can prove your point that Tom Brady is the best. You can prove your point any which way you want if that's all you focus on. I don't want to be that guy. And there was some good news on manufacturing. I think it was ISM index was up pretty good, actually, in pretty big expansion range. The job stuff concerns me, actually, and that just came out this morning. And I tell you, man, this is uncharted waters, and you shutting down the engine of the world's economy, which is the U.S. It's for basically, yeah, it sucks. People, look, it sucks. No other way around that. There's no hoax, but you don't come back just at this freaking swip of a flip, flip the switch, a change in president. You don't come back from that just overnight. And the ramifications, I think, are going to be felt for a long time. And if this is indicative, and I don't see how it won't be, I think it's going to be some tough roads ahead. So let's read it. Non-farm payrolls fell by 140,000 in December, lagging the consensus expected of 50,000 up. That's 190% off the consensus. Private sector declined by 95,000. The largest declines are in leisure and hospitality again. I mean, there's almost 500,000 people in leisure and hospitality, 63,000 people in education, 45,000 people in government. The largest gains were in professional business services. I don't know, including temps, see, that's what I'm saying, man. This is what I said even under the Trump, and I've said this. I don't think I've let hide my politics, but I always worry that even if we have a roaring economy, i.e., from low job losses or high employment, low unemployment, are those jobs solid? Are they kind of lower paid jobs that we replaced one 55-year-old man who was making 130 with two 35-year-old guys making 40 each? I mean, that shows up in unemployment as a net gain of 1, but from a pure GDP output perspective, is a net loss. Average hourly earnings did rise by 0.8% and are up by 5.1% a year ago. But I mean, you have less people working. We can make average hourly work employment numbers go way through the roof. Just have fewer and fewer people working. Implications: after 7 consecutive months of job gains, the impact of renewed COVID restrictions, which ramped up again in November, are showing up in economic data. Non-farm payrolls fell by 140,000, lagging the consensus expected gain of 50,000 on the positive side. The first payroll decline since the 20.8 million drop in April. Meanwhile, civilian employment, an alternative measure of jobs that includes small businesses, increased a bare 21,000 in December, the smallest increase since April. The underlying data was not much of a surprise. Well, apparently it was a surprise, man. I mean, I don't get that. I mean, because if we had expectations of 150,000, and instead we got 150 on the decline, that was much of a surprise. Leisure and hospitality jobs contracted by 498,000. Particularly among restaurants and bars, which lost 372. The other two that held down payroll growth was government and education. In other words, the data suggests a combination of increased government restrictions on activity related to COVID-19 as well as the colder weather on outdoor dining were the main culprits behind fewer jobs. Well, the colder effect on outdoor dining? No, it's not that. Come on, man. Who is it? My man, Brian Westbury. Come on. The colder weather on outdoor dining? No, give me a freaking break, dude. It was the increased government restrictions on COVID related to COVID-19. Well, the shutdowns garnered big headlines. The impact is predictable. A good portion of industries have learned how to continue operating. The Payroll Diffusion Index, which reports the percentage of industries gaining jobs minus those losing jobs, came in at 61%, well above the 50% mark where gainers and losers are equal. All right, so you have 61, we'll just say 100. You got 100 companies, 61 are adding people, 39 are losing people. That, again, I just told you how that, I mean, in of itself, that could be good or could be bad. We need more. Job gaining sectors include manufacturing, construction, retail, trade, wholesale trade, but financial activities, basically professional business services, and temps. He makes light of the temp thing. Like, I'm not trying to be one of these guys like, oh my goodness, I don't want to be that. I'm just like, in other words, this doesn't look like anything like a double dip recession. Well, except that we lost 140,000 jobs, right? I mean, look, 1 month could be anything. We don't know. But the other weak news in today's report is the average weekly hours ticked down from 34 to 34.7 from 34.8, which if you have weekly hours ticking down and wages staying the same, inherently you can have an increase in your wages, your hourly wages. I mean, that's no one's getting a pay reduction. Let's just use that. So if you got $100 and $100 and 100 hours, now you got 99 hours and $100. Your hourly wage just went up. How long can that stay? However, the loss of jobs among relatively lower paid workers in the leisure and hospitality sector helped push our average wage, hourly wages up because the people who are losing the jobs are. I'm trying to bite my tongue. The people who need, as long as they're not white collar freaking tech guys and hedge fund managers who no one gives a damn. But if they're freaking leisurely people, the leisure services and hospitality, it's that a lot of single moms in there, by the way. For comparison, back in April, total earnings were down 8.9% versus April 2019. Another way to think about it is that total earnings have increased in each of the past 8 months and now have recovered 88% of the losses that occurred in April and March. Well, the earnings maybe, but the employment numbers haven't. Note, as well as the unemployment rate remained at 6.7%, as both the civilian employment and labor force both picked up slightly. The road to a full recovery remains a long one, but today's soft report is not a reason to worry. All right, look for a job rebound in the first quarter of 2021 and robust gains in 2021. I don't know, man. Do we got a 12-month? All right, let's see. I want to see. Hold on just a second. Here, last month, non-farm payrolls rose by 245,000 in November. So we just saw the numbers that they fell by 140,000 in December when their expectations were 50,000 increase. That's a pretty significant drop from 245 to negative 140. So we gave back we were now over 2 months. We've only netted 100,000. But let's see what he said. Let's see what the implications were. The road to full recovery remains a long one. Now it's just a matter of getting back to the level of jobs we had in February. In the absence of the shutdowns related to COVID-19, jobs would have been rising since. We still think all right, well, it doesn't really say what he thought was going to happen here. We still think a full recovery means getting back to an unemployment rate of 4%, which is where we were before COVID-19. All right, so he's not saying average hourly earnings. Okay, I was wondering if he'd say something like where they expect a robust job market. Hopefully the vaccines move that up to sometime in 2022. Well, that seems a little bit odd. So he was saying a robust job market in 2021, and now he's saying hopefully the vaccines will move the robust job market for full unemployment at only 4% to 2022. I don't know. I'm civilian. Okay, civilian unemployment decline right here. Yeah, I don't know, man. I don't see. We had 240,000 created in November, 140,000 lost in December, against expectations of 50,000 gains. So what would have been over 2 months' time, 150,000 jobs created each and every month, is now down to 50,000. Yeah, that's off, 66% or something like that from what their expectations were. I don't think that's good. I don't know. Again, I'm just like I say, I think it's better to be cautious if you got retirement right on your mind because we've had a nice run, man, for 12 years, and it just seems to me that this I've stated this a million times a Sunday. Wait till the winter's done because we're only 2 weeks into winter, man. The cold hasn't begun. It's gonna be interesting to see how it shakes out. Always better be safe than sorry. All right, we'll see you guys.